Hello and welcome. You're watching Market Cafe with me, Ankita Saxena, and it's yet another day, new day, and big news flow coming in from the global markets. Yes, the big CPI number was out yesterday for the US, and the inflation has turned higher to start 2023 as rising shelter, gas, and fuel prices took their toll on consumers. The CPI rose 0.5% in January, which translated to an annual gain of 6.4%, which was higher than the estimated increase of 0.4% to 6.2%, which means that the inflation was higher by 0.2% than it was actually estimated. Now, on the back of that, we saw the treasury yields rise. The 10-year treasury note rose 3.4 basis points to 3.7%, and the yield on the 2-year treasury note climbed 8.1 bips to 4.6%. Now, the stocks also wavered and the Dow Jones fell, reversing earlier gains, slipped 156 points in trading session yesterday. The Nasdaq Composite recouped earlier losses to close 0.5% higher, boosted primarily by technology stocks including Tesla and Nvidia, which rose 7.5% and 5.4% respectively. Now, the S&P 500 was absolutely flat, ended the day in the red. So that was the roundup of the US markets. Big CPI number came in, higher, hotter than expected inflation numbers, which obviously paves the way for the Fed to raise the interest rates higher. Now, let's look at the European markets. European markets ended a choppy session, 0.1% higher, taking the stock 600 to touch a one-year high. Now, the index is up more than 9% in a year-to-date amid a stronger than expected earnings season and improved economic forecasts, with the Eurozone now widely expected to avoid a recession. The CAC and FTSE were largely flat, ended the day in the green, and DAX, however, was down just 0.1%, also largely flat in trade. So that was a roundup of the US and the European markets. Now, let's quickly go and check where the crude's at. Now, if you look at the oil prices fell about 1% yesterday after the United States said it would release more crude from its strategic petroleum reserve, lifting some supply concerns from the market. Now, remember, on Monday, the US Department of Energy said it would sell 26 million barrels of oil from the SPR, which is already at its lowest level since 1983, a release that had been mandated by the Congress in the previous years. Now, let's look at the Brent crude. Brent is at $85, hovering around the $85 a barrel mark, and the WTI at $78.8 a barrel. So now we quickly look at the events that you need to watch out for in today's trading session. Now, for the events, we have the last day to be eligible for dividend for Chambal Fertilizers and Shree Cement. It's the last day. Also, we have ITC, Manappuram, Tube Investments, and Aarti Industries. The ex-dividend date for them is today. So watch out for these stocks. And also we have the FOMC member John Williams' address and the ECB President Lagarde, who's going to be addressing us today. And also we have the Oppo Find N2 Flip launch globally. So these are the events that you need to watch out for in today's trading session. Let's quickly move on to other news that made headlines. US consumer prices rose 0.5% in the month of January, making the inflation print on a year-on-year basis stand at 6.4%, which is above the estimate of 6.2%. Now, do these numbers mean that Fed has a long road to cover in 2023 to bring prices under control? We spoke to market experts Jen Lamberts and Ajay Bagga on the same. Listen into what they had to say.
If you take into account, of course, also the bumper employment report that we recently received, I can't see how they are about to stop. It's quite clear that the US economy is still very hot. They haven't cooled it down enough. We're seeing prices here still fall, but less than expected on a year-on-year basis. I think as we dig deeper in the numbers, and we have to do that still, we'll see that goods price disinflation continues, but not at the pace we want. where services price inflation remains uncomfortably high. And all of this is taking place while the Bureau of Labor Statistics has actually changed the basket behind this in a favorable way for inflation, as in the basket change itself, less emphasis on energy, for example, should have helped inflation come off. But it's not what we're seeing. So I think the Fed will be concerned by this and will be raising its terminal rate. We're working at the moment with a terminal rate of 5.5% for the Fed funds rate.
Markets are eternally optimistic. So I don't think the US market has yet made its bottom for this bear market cycle. We have been, flattering to deceive. I'm expecting a sell-off, sometime down the line. I don't know when and what would be the catalyst for it, whether it's geopolitical or whether it's persistent inflation over the next 3 months leading to a 5% plus Fed fund rate. I don't know where that catalyst will come from, but we have to still make the bottom.
And moving on, former governor of South Carolina and United Nations Ambassador Nikki Haley announced she was entering the 2024 presidential race. This makes her the first Republican to challenge her former boss and ex-president Donald Trump for the Republican nomination. In a video posted on her Twitter account, Haley calls for fiscal responsibility and secured borders, also hits out at Joe Biden, saying his record was abysmal and that the Washington establishment has failed us over and over again. And the White House has tapped Federal Reserve Vice Chair Lyle Brainard to lead the National Economic Council. US President Joe Biden also named Gerard Bernstein to head the Council of Economic Advisors. These two roles are critical for shaping US economic policy as the country grapples with persistently high inflation. The announcement is the latest in a series of staff shakeups in the administration as Biden looks towards a potential re-election bid. Ford Motors has paused production and shipments of its electric F-150 Lightning pickup due to a potential battery issue. The possible battery issue is being investigated after a vehicle displayed a potential during pre-delivery quality inspections. Now, Ford has not established a timeline for when the production and shipments will resume. And Japan's government named academic Kazuki Uriya as Bank of Japan's governor. This is a surprise choice that could heighten the chance of an end to its unpopular yield control policy. Now, Uda is 71-year-old former Bank of Japan Policy Board member. With inflation exceeding the central bank's 2% target, he faces the delicate task of normalizing its prolonged ultra-easy policy. And its earnings season's Airbnb reported fourth quarter earnings that beat analysts' expectations on top and bottom lines. Revenue for the fourth quarter was up 24% on a year-on-year basis. Airbnb also said the guest demand and supply growth remained strong throughout 2022. The company said it made difficult choices to cut spending during the pandemic, but has modestly increased its headcount over the past 2 years. And the death toll from the devastating earthquake in Turkey and Syria crossed 40,000. Rescue teams in southern Turkey say they are still hearing voices from under the rubble more than a week after the earthquake. A 5-year-old boy was rescued from the rubble of his home 105 hours after the earthquake. And well, at Times Network, we are always looking to create investor awareness and make financial matters simple for our viewers. Now, keeping up with the values, we present the second season of Nivesh Ke Funde. And on this edition, we discuss saving and investing, which are both important concepts for building a sound financial foundation. Let's take a look.
Hello and welcome to another edition of Nivesh Ke Funde. Today we will talk about something that is at the foundation of a person's personal finance journey.
That's right. We're going to look at the savings and investments and the different roles they play in a person's financial portfolio.
Let's start with savings. It's when we keep aside money for an emergency that we can have easy access to. So basically, savings has high liquidity.
Investing on one hand is using money to get some assets that we hope will grow in future, thus helping us grow our wealth.
Well, under the heading of investing, there are a number of different assets that a person can explore, which provide varying levels of returns along with different levels of risk involved as well.
Yes, so investors can pick and choose the investment options that are in line with their risk and reward appetite, and most importantly, their time horizons. So if someone wishes to invest for a short to medium-term duration, they can invest in debt mutual funds, and someone who's looking to invest for a longer time horizon in a higher risk product with relatively higher returns expectation, they can invest in equity mutual funds.
And there are many options that would be suitable to persons' varying requirements, and the best part is that people can now invest as low as ₹100 per month through different mutual funds.
Another point in managing your personal finances is that a person should be disciplined. Being disciplined with savings and investments is important, and through mutual funds, this discipline is made easy as a person just has to opt for a SIP or a systematic investment plan.
Absolutely, and with the SIP, an amount that is decided by the investor is invested at a time fixed by the investor in a mutual fund picked by the investor himself. So in this way, the investor gets full freedom to choose their investment journey as well.
That's all on this edition of Nivesh Ke Funde. Hope we've been able to explain the difference between savings and investments for you. Stay tuned for more such investment insights only on ET Now.
Welcome back. You're watching Market Cafe on ET Now. We'll quickly switch to domestic news. Tata-led Air India makes the biggest aviation deal in the history, in terms of historic orders. 470 aircrafts in a single day. Signs a deal with Airbus for 250 aircrafts, while Biden announces that Air India will buy 220 Boeing planes for a whopping $34 billion. So he said this is Boeing's third biggest sale of all time in dollar value and second of all time in terms of quantity. Air India's order with Airbus includes 210 narrow-body aircraft. ET Now spoke with the former ED of Air India, Mr. Jitendra Bhargava, about the Air India deal with Airbus as well as Boeing. Listen into that conversation.
Tata's ordering such a huge quantity, this mega order, is basically a reflection that you're making up for lost time as well. Let's not forget, government-owned Air India had no resources. We had not been growing. So one, it justifies the decision of the government to disinvest. Air India wouldn't have been able to place an order even 1/4 of the size had it still been government-owned. So full marks to the government for taking the decision on disinvestment. Full marks to Tata's for going ahead and placing an order of 470 plus aircraft. More importantly, look at the significance of this order. President Macron of France, President Biden of USA hailing the order. What better way of showing to the world that India has arrived in a big way on the global aviation scene. We are no longer talking of an airline with 100, 150, 200 aircraft. 470 is a huge order by any standard. And it only goes on to show that Tatas have a plan in place. India is a growing market. We've been saying this for years now. But the harnessing of this growing market was being done by the Gulf carriers and the Southeast Asian carriers.
And well, staying with that news, Tata Sons chairman N. Chandrasekaran said that it was a milestone moment for them, and the deal is expected to be the largest ever deal in the global aviation industry. Air India will get 40 wide-body, long-range aircrafts and 210 narrow-body aircrafts. Now listen in to what N. Chandrasekaran and as well as the Airbus CEO had to say about this deal.
We have signed a letter of intent to acquire 250 aircrafts, 40 of them on the wide body A350, which we will use to fly all ultra long distance across the globe, and 210 narrow body. And we have also have significant options to increase the fleet order once we grow.
Historic moment for India, for Air India and for Airbus. And at Airbus, we are very proud and grateful that the Tata Group has chosen the A350 and the A320neo to script Air India's revival. The magnitude of the Air India order, the size of the 250 planes that Chandra just explained, demonstrates the appetite for growth in the Indian aviation industry. It's the fastest growing in the world.
Right, and on this big one as well, let me go across to my colleague Anurag Joshi, who's going to break down the letter of intent between Air India and Airbus and what it signifies.
Air India, owned by the Tata Group, will buy 250 aircraft from Airbus. Air India has signed a letter of intent with Airbus for the fleet order, with the option of increasing the order depending on the airline's growth. Air India will purchase 210 narrow-body A320 for domestic and regional travel, and 40 A350 aircraft, which would be used for the carrier's long-haul flights. Unveiling Air India's collaboration with Airbus today in a video conferencing call, Tata Group Chairman N. Chandrasekaran said that the future collaboration would include the making of the C-295 military aircraft, and also unveiling plans for the manufacture of a commercial aircraft in India. The call was attended by both by Prime Minister Narendra Modi and French President Emmanuel Macron. Speaking on the same call, Airbus CEO Guillaume Faury said that Airbus sees India as the fastest growing aviation hub in the world, and the goal is to make India an international aviation hub. And the company sees India as a strategic industrial and technological hub.
And moving on, the GST Council will convene for its next meeting this Saturday, that is the 18th of February in New Delhi. Now, sources are telling your channel that the 49th meeting will see the members deliberate over the GOM report on the appellate tribunal. However, the much contentious GST on online gaming is likely to be on the agenda. The council may take a decision on millet products and reduce the GST imposed on these products.
Well, and quickly taking you through what the market has in store for you going forward. Well, we had the key US CPI inflation number coming in at 6.4% versus the expected 6.2%, and we have Ed Yardeni who's going to break that down for us and what it means for markets. After that, at 9:20 a.m., we have Aman Chauhan of Abacus Asset Managers, who's going to take us through what his views are for 2023 going forward. Also, we have Kinjal Shah, who's the co-group head at ICRA, also, who's going to talk to us about how CVS is doing better now. And quickly moving on, we have Kulwin Sira at 9:45 a.m., who is the ED at GNA Axles. We have then earnings in focus. We have both Prestige Group as well as Apollo Hospitals, who's going to come in and speak with us at 10 and 10:20 a.m. respectively. So, power pack lineup for you ahead on the market. Right, welcome back. You're watching Market Cafe on ET now. Let's quickly take you through what Asian markets are up to. Largely global markets were mixed, but Asian markets have started in the red, at least as we speak. The Nikkei is down around 1/10%, not much, but still in the red nonetheless. We're looking at cuts on the Kospi as well. The Kospi is down around 2/3% or almost 1% now as we speak. We have the Hang Seng, which is down over 1%. ASX 200 also down 1.2%. The Hang Seng, as you can see, is down over 1.5%, and the Shanghai too is in the red as we speak, more than 0.25% down. Of course, a lot of this is on the back of what's happening in the US with regard to inflation. It's come in slightly higher. You can see the US 10-year bond yield also at 3.75%. So we're seeing a little bit of a ripple effect coming through on the back of that. But that's where Asia is at. We'll quickly take it across to Ashesha, who's here with us. Good morning, Ashesha. Talk to us about all the stocks that are in news today.
Hi, good morning. So Apollo Hospitals will be the first one in focus on the back of its results. The company has reported a miss on the EBITDA front. Sales for the quarter gone by stood at 4,263 crores on a year-on-year basis compared to 3,600 crores that the company reported same time last year. As far as margins are concerned, they did contract a tad bit. The company has reported margins at 11.9% this quarter versus 16.1% margins that the company reported same time last year. As far as the hospital business is concerned, hospital business EBITDA grew at about 9% on a year-on-year basis, while margins for this segment were steady at 24.7%. Meanwhile, Radico Khaitan also reported its numbers post-market hours yesterday, where revenues declined by about 4% on a YOY basis. As far as the bottom line is concerned, that has also seen a knock this quarter. Margins contracted to 3.1% versus 3.6% same time last year, while net profit has come in at 61 crores, a decline of 23% on a year-on-year basis. Phoenix Mills will also be in focus on the back of a block deal that took place yesterday. Nomura India Investment Fund bought about 12.5 lakh shares of Phoenix Mills at the price of 1,310 rupees per share. So on account of this block deal, keep an eye out on Phoenix Mills as well. Moving on to Biocon then, again in focus on the back of its numbers where core earnings were largely in line with what the street was working with. Sales rose by about 35% on a year-on-year basis, while margins contracted this quarter. They came in at 22%. Versus 26% margins that the company had reported same time last year, indicating a contraction of nearly 400 basis points on a year-on-year basis. As far as the biosimilar sales are concerned, they grew by about 54% on a year-on-year basis. Research services, meanwhile, grew at about 23% YOY. Moving on to Torrent Power then, where revenues grew at about 71% on a year-on-year basis, but margins have contracted this quarter by about 250 basis points, while net profit has soared to about 695 crores, an uptick of 88% on a year-on-year basis. So on account of results, keep an eye out on Torrent Power as well.
Well, thank you so much for those details, Ashesha. Do keep an eye out on all these stock in today's trading session. And quickly moving on, Aditya Birla Group is in the process to raise funds at the promoter level for an equity infusion into Vodafone Idea. The company is in discussion with global banks for raising term debt to subscribe to preferential allotment of shares. These funds will be used to part finance the planned 5,000 crore rupees equity infusion by the promoters into Vodafone Idea, following the Indian government's decision to convert dues worth 16,000 crores into equity. As of now, there is no clarity on whether the UK's Vodafone Group will also invest in Vodafone Idea, but it is likely that they might liquidate their remaining stake of 21% in Indus Towers and use those funds to invest.
Well, an Abu Dhabi Investment Authority, which is ADIA, Goldman Sachs and Carlyle, are in active discussions with TVS Motor Company to invest $300 to $350 million in the company's EV arm at a potential $3 to $3.5 billion valuation. If the deal takes place at this valuation, TVS will become the most valuable EV in the country as of now. TVS EV is the second largest E2W company in India in terms of volume.
And let's go across to Ashesha yet again because she has all the brokerages. Ashesha, tell us, what are the brokerage notes saying this morning?
Let's talk about Bharat Forge first, where JP Morgan has come out with a report. They are maintaining their neutral rating on the stock with a target price of 875 rupees per share. They say legacy business is unlikely to surprise, while defense orders will be the most important driver for Bharat Forge going forward. Subsidiary performance, however, was muted in the quarter gone by, and on account of that, they've cut their FY23 estimates, consolidated EBITDA estimates by about 8% to factor in the weakness that we saw in the quarter gone by. As far as FY24 and 25 EBITDA estimates are concerned, they've increased it a tad bit by about 3 to 4%. For now, they are maintaining their neutral rating on Bharat Forge with a target price of 875 rupees per share. Apart from this, Bank of America Securities has also come out with a note on Bharat Forge where they are maintaining their underperform rating with a target price of 730 rupees per share. They say third quarter miss was on account of weak performance by foreign subsidiaries. Traditional business, however, continues to remain stable in terms of its performance, and new business growth will be a key driver going forward. Morgan Stanley, meanwhile, has come out with a note on Eicher Motors on the back of its results, where they are maintaining their equal rate rating on the stock with a target price of 3,555 rupees per share. They say company has gained market share post launch of Hunter in the quarter gone by. Margins and market share, however, they believe are likely to peak out in 2023. As far as key triggers to watch out for going forward are concerned, remember Bajaj Triumph launch is scheduled to happen in 2023. Apart from that, Hero Harley launch in 2024, they believe will be the key drivers going forward. Full benefits of commodity price decline and price hikes were, did flow through in the quarter gone by, and hence for now they are maintaining the equal weight rating with a target price of 3,553 rupees per share.
Right, thanks so much for that, Ashesha. We'll quickly move on. Gautam Shah, who is the CMT, founder and chief strategist of Goldilocks Premium Research, expects the Nifty Bank to fall further and remains bearish on banking. Listen in to his outlook on banks.
Second half of last year, we saw a phenomenal rally on the bank Nifty. I think we had levels of 44, 44, 500. It was great going, everything participated, and things just changed completely in the last 1.5 months. I think there is a lot more room to fall. Our initial target was around 39,600, which was tested. Anybody looking at the charts would know that it was the important support. From there, we've seen a bit of a bounce. But the bank Nifty, once again, if you look at the last 5-6 days, it's not been able to take out that level of 42,000. So till that number does not get taken out, we would remain bearish, and we want to believe that eventually 39,600 will break, leading to much lower levels. Again, if you look at the leadership, look at ICICI Bank and SBI, two of the poster boys of the last 2 years. They have stopped outperforming. And HDFC Bank as a stock has just got range bound and it's just languishing just below lifetime highs. Axis Bank, IndusInd Bank, and the PSU banks, obviously the BOBs and the Canara banks of the world, they all have negative setups. So I think banks and Reliance put together would be the reason for the market to break down if it were to happen sometime in the near term. Well, I think it's got a little popular and it's moved deep into retail now. So we are actually avoiding the Adani Group now. I think last couple of years was a great money-making opportunity on the long side. Last couple of months was a great opportunity on the short side. It's all played out. Now it's got into a very noisy kind of a phase, wherein there is no trend. Rallies are getting sold into, dips are getting bought into because some people feel that it's a little overdone, which is also a fair argument. So in this, I don't want to be standing in between, rather stay on the fence and let Adani stocks do what they want to do. So I'm not a buyer, nor am I a seller at high levels. It's just an ignore for me. I think there are much better pockets and bets in the market where you are getting a lot of momentum. I'd rather focus there. It's already been a very large fall, right? I mean, and it's been very fast. In a matter of 6 weeks, stocks have fallen 40, 50, 60%, 70%. Now that's large by all standards. So the panic lows, I think, will hold for some time. But if my overall market view is negative and I believe that eventually the indices will see a breakdown, I think at some point of time, the recent lows could be retested and maybe even broken by a small margin. So I don't see clear-cut bottoming signs. If at all, I would still look at an Ambuja where I feel the recent lows might still hold out. So I would still look at that stock. But everything apart from Ambuja, I think it's still too early to say that the worst is over.
And well, that was Gautam Shah for you on banks and Adani. Now, that was about the big boys, but let's move on to the new age tech stocks that have been in spotlight amid volatility and their commentary about turning profitable. Now, brokerages have tweaked their stance and targets based on growth visibility. My colleague Sharad is here in the studio with us, and he's going to talk to us about which stocks have seen the maximum upgrades and downgrades. Sharad, take us through that.
Well, yes, let's just divide the earnings into two parts. One is the good part, which is, of course, the Paytm and the PV FinTech.
And the second is, of course, the coming in is from Nykaa, Zomato, where the issue is coming in. Now let's look at the important target price changes, what has happened. First thing is the maximum upgrades, and of course double upgrade coming in from Macquarie. This is for Paytm, and if you look at PayB Fintech, that is also experienced almost a 20% upgrade coming in for Morgan Stanley, but no major upgrades for the remaining new 3AH tech companies. But downgrades, that is something to watch out for. However, Paytm, if we see, is a minor downgrade coming in, but for Zomato, that's a strong downgrade of almost 10% from Nomura. But Nykaa, that's the number to watch out for. From 314 rupees, that has fallen to 206 rupees, and courtesy, that's Morgan Stanley. But now let's look at the average target price changes, what has actually happened. So over here, we see for Paytm itself, that has increased by almost, you can say, from 899 to 918 rupees. For Zomato, there has been a slight cut. For PB Fintech, there has been a significant jump, and I could say that from 675, it has increased to 707 rupees per share. For delivery, kind of a weak set of numbers coming in, and we also saw logistics stocks also falling. And over here also, we see the price cutting into almost 410 rupees. And Nykaa lastly coming out with its numbers, and a very strong, almost a 50% downgrade coming in the target price. So Nykaa actually is having the highest brunt when the target price fall is being seen.
Thanks so much for those extremely interesting observations on New Age Tech, Sharad. But switching over from New Age Tech to commodities. Well, commodity guru Jim Rogers owns commodities, gold, silver, both. But what are his views on the US dollar? Let's listen to what he had to say.
Times, as you know, I'm sure you watch ET now, many times gold has done badly no matter what's going on in the world. So, I mean, I wish life were so simple. Dollars. I expect the dollars to go higher before this is over, because when we have turmoil again, everybody's going to look for a safe haven, and they think the U.S. dollar is a safe haven. It's not, but everybody thinks it is, so I own a lot of U.S. dollars still. But if it ends, or if there's a ceasefire, everything is going to react. Stocks are going to go up a lot, bonds will go up a lot, and oil will go down, grain will go down. But if I were, what I plan to do, if that happens, is to buy grain and to buy commodities, because that will be a buying opportunity. I would say probably Japan, probably China right now, because both of those markets are still down from their historic highs. Maybe India. I mean, India's been a strong market for years, as you know. Somebody's done a very good job in India, but I would suspect Japan or China would be a better place to diversify. That China it has been very restrictive internally for a while, but it seems to me that something is changing and that China is now trying to be more open to the outside world. If that happens, it's certainly going to affect the Chinese economy, but it's going to affect the worldwide economy. I mean, there's been very little travel in China or out of China for 2 or 3 years. The travel industry, tourism everywhere, is going to prosper if they really are opening. And it's my view that they are opening up more than they were before.
Well, that was Jim for all of us. Now moving on, after the success of Krishi Udan scheme, the government has decided to add 21 more airports under the flagship scheme of Krishi Udan scheme. This scheme was launched to facilitate the seamless movement of agriculture produce in remote locations of the northeastern region, hilly and tribal areas of the country. Now, currently around 31 airports are under the scheme. And food tech giant Swiggy is gearing up all for IPO, and for that they are only keeping operation and business that yields profits. Hence, reports suggest that the company is planning to do away with the kitchen infrastructure business. It is also reported that the company is selling off its cloud kitchen service business to a company called Kitchens at the Rate.
Well, and quick commerce player Blinkit is looking to expand its micro fulfillment centers by 40% increase in store count in the next 12 months. Currently, the company has over 400 dark stores that act as warehouses. Uttarakhand government to reopen the traditional pilgrim trail to the Kedarnath shrine from Gaurikund in Rudraprayag district via Rambara. This comes after the State Wildlife Board has provided its approval.
Well, with that, we're completely out of time on this one. You don't go anywhere. There's markets coming up. Thank you so much for tuning in.